following is a presentation of TFNN. The Tom O'Brien Show is produced every business day. Tom takes your phone calls toll free at 1-877-927-6648. Internationally at 727-445-1044.
We got Carlos from California. Carlos, what's happening?
How you doing, Tom?
I'm doing great,
How
man.
are you?
Yourself?
Oh, very well, thank you.
That's awesome,
Thank
man.
you very much. Can I make a comment real quick?
Absolutely.
For me, it's a real challenge every time I'm doing a trade. And thanks to your help, I've been able to done a lot of things as far as trading. And I know there's a lot of Hispanic people who are listening, and they think this is a lot harder than it looks. But with your help, it's been a lot easier to make things sound very simple.
That's a beautiful thing, man. Well, listen, we appreciate it. We appreciate it.
Now, Tom O'Brien.
Welcome, folks. This is Tom O'Brien of TFNN. We go 5 days a week. We go 10 hours a day. We go 24 hours a day on the internet at TFNN.com. Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. Hope everyone's having a great day, safe day. It's a TGIF, folks. All you folks up north, Midwest, stay warm, because it's cold out there, I guess. Create new agreements based on respect and love. Take the responsibility to make new agreements with those you love. If an agreement doesn't work, change the agreement and create a new one. Use your imagination to explore all the possibilities. Market-wise, let's take a look at it out here. We have the Dow Industrials down 10, NASDAQ off 19, S&P's down 6.5, gold contract up $6.20, trading at $1,136 an ounce. Silver up 17 cents at $16.12 an ounce. Platinum up 28 bucks, $9.26 an ounce. Copper down 4.5 pennies at $2.55 a pound. Light sweet crude up a buck at $53.01 a barrel. Bonds, the 10-year down 4 ticks, 122.25. 30-year off 28 ticks, 147.21. King dollar down 83 ticks at 102.935. The euro is trading at 104, and the yen is at 117.98. Our phone number is 877-927-6648. Give us a call, folks. Want to know what's going on in your world. In the world of the S&Ps, let's take a look at them. What do you have? If we go over to the cash S&P, what you're looking at is this, folks. Excuse me. We got a high that was established out here on Tuesday. That high was at 1277.53. You get a sideways market out here today. That's the reality. You're down $4. That's not a big deal. Dow Industrials. What do we have with the Dow Industrials? Now, the Dow Industrials gets a little bit more interesting. And it's really going to depend on what type of volume that we have coming into the close out here. Now, it's quad witching, so I expect you're going to have monster volume. If we stay down, as we are right now, that is going to set up lower prices next week. Why? Because we came into, let's go back to the Dow for a second. So what you're going to see in the Dow is this. What we had done is that we had established a high on Wednesday. That high was 19,966.430. We tested that high yesterday at the 951. Today, you're going south. We're going to get an expansion of volume because it's option expiration. This market stays down. That's going to be your confirmation that guess what? You're going to start a correction. The NASDAQ composite. What do we have with the composite? And that's, by the way, that's just deviant enough, folks, that we missed the 20,000 mark by 45 points. NASDAQ composite. What do you have with the composite? The composite right now is down 21 bucks. Your high was established in the composite on Tuesday. Tuesday, we got to a price point of 54.86. We tested that high yesterday on just about the same amount of volume. So if we look at the composite, what you have with the composite is that the first high was established at 2.083 billion. The test was on 2.096 billion. Bottom line, right now we're at 1.6. We're going to go do about 2.5 billion, folks. I expect the market's going to stay low. I expect you're going to sell off coming into the close, and you're going to have monster volume. NDX 100. What do we have with the NDX 100? Now, NDX 100 looks like it's going to actually fail on the daily, fail on the weekly, and you're going to close back inside where it broke out from, which was on Tuesday. Tuesday, we got to a price point of $49.60. We're at $49.09 right now. You close under $49.11.763. Guess what? That's a failure on price, failure on volume, and this is the kicker, you'll be coming back inside the range with monster volume. When you have a breakout, and it's a false breakout, when you come back inside that range and you come back in with volume, get out of the way, man, because that is a monster failure, and you're going to go right back down the other side of that. Now, when we're talking about the NASDAQ composite, you're talking about the other side of this consolidation that it broke out of is 46.56 to 46.47. So it's a big number. Gold contract. What do we have with gold? Gold contract out here. You get a sideways move out here today. You're up $6. Gold needs a lot more help. That's the real bottom line. What you do have, okay, what they didn't get done on gold today, and I almost rather that they actually did it, was getting gold into the 11.15 area. So 11.15, let me see what we hit. Well, we hit 11.23. 11.15, folks. In January, if you had been in that market, gold went from 10.46 up to 13.76. These gold equities, silver equities, they went up by 250, 300%. Bottom line, the contract has a deep retracement. You're coming into the strength that was established out here the week of the 5th of February. That's 11.15. Yeah, so we'll see where it shakes out. If you go to the GLD, what you are going to see is that the GLD is going to have a failure on price and a failure and a rejection of price on dramatically lighter volume. This is a nice setup. What you have inside the GLD right now is this, is that the GLD traded down to $107. On a weekly basis, we've done 49 million shares, and you are going into 60 million. It's the same bar. It's the week of the February 5th. And bottom line, you get a rejection, you get a test, you get all of the above. So now what gold has to show is a sign of strength to go topside. Silver. What do we have with the silver contract? Silver contract is up 17 cents. That got toasted and roasted yesterday in a big way. If we actually, SI1, we take a look at silver, we put this on the continuous contract. What we're looking at is that silver into the same bar. Actually, no, silver's into the April bar, so silver is still stronger. It's interesting, actually. It's 1583, so silver went to 1589. Yeah, so silver, this will be interesting. Silver came into its strength from the week of the 22nd of April and rejected it. So it's a good scene. That's if we do the SLV, let's go see what the SLV looks like, because with the SLV, you can get the volume characteristics there. So the SLV, we were going into 52 million, and you did 60. So so that doesn't work. So the volume characteristic, acceptance, actually 77 million was the last time down, and 102. You're at 15. I'd still want to see the SLV get to 1560. That's the number you'd want to see. This is Tom O'Brien. This is TFNN. Our phone number is 877-927-6648. Dow's down 13. Nasdaq's off 21. S&Ps are off 7. We're going to be right back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow Industrials right now down 19, Nasdaq's off 22, S&Ps are off 8. Now, as you come over to our website, folks, at TFNN, what you're going to see on the front page, we do this, we do the Tiger Dolls a couple times a year. We do a deal at the holiday time with the Salvation Army, and this is how this bonus works. So Tiger Dollars are good for all product at TFNN, no expiration date, good for, and totally transferable. So if you'd like to make some money on your money, a 25% bonus, you have until next Thursday. The way it works is that if you buy $600 in Tiger Dollars, you get $750 to spend on all products, 25% bonus. If you buy $1,200, you get $1,500, $300 bonus. If you buy $1,800, you get $2,250 or a $450 bonus. What we also do is this. We are going to donate 10% of the cash value to the Salvation Army in your name. So if it's a $600 buy, you get a tax-deductible certificate for $60. If it's $1,200, you get $120 taken off your tax. And that's a tax credit, by the way. It's at the bottom. If you buy $1,800, it's $180. Salvation Army, it's a great cause, number one. What they do, they send the tax-deductible certificate directly to you. You can do this now until the 22nd of December, and that's a hard date, folks, because what ends up happening is that, bottom line, we have to get them the names, get them the check, get them all the above, so then they get you out that tax-deductible certificate before the, for taxes this coming year. So check it out on the front page of TFNN. If you have any products now, if you have any products you want in the future, it's a great deal. Market-wise out here, let's go take a look at the NDX 100 first. So inside the NDX 100, the laggards out here, you get Liberty Ventures, that's down 4%. You get Seagate Technologies off 3.5, Semantics off 3, and CA is off 252. The strength is Alexin Pharmaceutical. That thing has already got smoked. That's up 2.6%. You get Automatic Data up 2.2, Tesla is up 2, and Vodafone is up 2. Inside the Dow Industrials, what do we have? The strength versus the weakness. Inside the Dow Industrials, the weakness is Caterpillar. That's down 1.7%. Intel's down 1.5. Visa's off 1.3. And Goldman's off 1.2. Strength is United Health. That's up 1.7. GE's up 1.6. Travelers is up 1. And Chevron is up 1. Let's go over and take a look at this oil market. So what oil has done out here this week, folks, CLG7. So oil market, when we look back on this week, what you're going to see is this. Now, this is going to be really wild watching this close in here, and this is why. So you had the OPEC meet. They met on the 30th. Bottom line, they met on the 30th. Oil goes from $46 to $50, nonstop, right? Then what ended up happening is the Saudi oil minister came out last Saturday night and said, guess what? We are going to reduce the 10 million barrels a day that we produce, and that was almost unheard of. But what ends up happening with oil? Oil spikes Saturday night. When the oil market actually opens, it opens at $55 on Monday morning. Opens at 55, sells off all day long. Bottom line, if we get a close, and it looks like we are going to get a close under this, it's been trying to make it above it. So the number to keep your eye on is $53.26, because that would also be a failure of the consolidation that oil has been in. If we go take a look at the XLE, the energy stocks, what we're going to have there, that is up 27 cents right now, and they are coming into a huge amount of resistance. That resistance that they're coming into, just to give you an idea, last month we went up with 368 million shares. Well, you're coming into 782 million shares, you're coming into 662 million shares, and you're coming into 769 million shares. There's a huge amount of folks that are this supply line. I mean, it's a monster. So it's going to take quite a while to get through this supply line, because the supply line is just not from 2014. The supply line actually goes back to 2008 also. So the supply line in that structure is huge. The XLF, the financials. Okay, so the financials, of course, you want to keep your eye on in a huge way. Why? Because bottom line, what you already saw, and this is where this gets wild. So when our Federal Reserve went up 25 basis points, or 1/4% on Wednesday, what that does immediately is this, is that the 10-year, so let's go back, I'm going to go to the 10-year note for a second. What the 10-year note has done is this. The 10-year note, folks, is trading at 2.593. Well, in the last 3 months, that's at its high. The 10-year note has gone up in 3 months from 1.55 to 2.5. What that has done, that's thrown a good 0.5% in the 30-year mortgage market, because the 10-year dictates what the 30-year mortgage is going for, 15-year, all of the above, okay? But so that's a big number. That move was already made. Now, that being said, what ends up happening is that the discount rate, the rate that's going from bank to bank, okay, where the Fed controls, that is what controls the prime rate. And what you saw immediately is that all the banks went up immediately 25 basis points. What they didn't do is of course, they didn't go up 25 basis points of what they're going to pay anyone. So my point is this. Immediately, they get an extra 1/4%. They also get an extra 1/4% on everything that is in the bank, everything that's at the Fed, okay? You talk about creating money, it's huge. Now, that being said, now let's go to the XLF. So XLF today, we're 23.38. And the XLF looks to me like it's going to at least trying to test. We get a pullback happening. And we'll see whether the 22.32 to 21.70 looks like it wants to be tested. So next week is going to get really intriguing here. And this also comes down to the point of, is it going to be able to hang at highs? There's plenty of volume last month. We did 2.2 billion shares. That is big volume. We're going into 3 billion shares. But that had been building cause since December of 2014 in order to get through the supply line. And, it has enough volume to eat into it. And it ate into it pretty good. Now, so the kicker here is this. If you start to see banks pulling back, what you're going to well, what you should put your head wrapped around for a second is this, is that's when you want to start watching these bonds to see, okay, is in fact bonds going to go higher again and rates are going to go lower. What hasn't happened yet is this, and we're going to pull up the 30 right now because the 10 and the 30, okay, have not been able to hold price. The 30 almost rejected lower price. Well, it did reject lower price on Wednesday, but guess what? It's not, as we finish the week out, it's not going to reject lower price. That being said, the number that you're going to keep your eye on real closely, which it hasn't broke a major swing yet, is 147.11. But guess what? We've gone to 148.26. So that's, and we haven't broke a major swing inside the 30-year bond, folks, since 1999 and 2000. You stay right there. We'll be coming right back. Dow is down 17. Nasdaq's off 23. S&P's are off 7.5. We're going to be right back.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. And if we stay with this bond market and note market for a second, what you're going to see is that, so the 10-year right now, folks, the 10-year is trading at 122.26, and that baby just looks like it's going to close as close to its low as it can get, really, without at its low. The 30-year, the low that was established, it was yesterday, but this is not good. This is not a rejection of price on the 30-year either. So the 30-year is at 127.21. It would have to close over 128.11. Yeah, the thing is, it's just not there. We go take a look at the XAU. The XAU right now, we're at 74.11. We bring this baby back, and what you're going to see, let's get this. Now, I won't have today's volume, but on a weekly basis, what we will, I'll be able to kind of gauge it somewhat. So we are going into 373 million shares, and as of yesterday, you did 205 million. So it's not even going to be close on a basis of, let me just get this, come on, baby, right there. Okay, so, let's see, XAU, 66 million. Okay, so let's do this again. So if I bring this up, XAU, we're going to bring it back. We're going to add 66 million. It averages about 66 million a day, so I'm going to add 66 million to this number on a weekly basis. So, okay, so you get 265 million. So realistically, we're 100 million shot. And what this did now, this is pretty cool for the XAU. The XAU today, this week, got down to $72.66. The high of its strength, goes back to March, XAU went from 64 to 73. So a close of a 73.81 is a rejection of lower price with lighter volume. Of course, what you're going to need, now you're going to need a big sign of strength, wide price spread, accelerated volume, but you have the test. What you also have is that the last time that we had big volume down was November. So we broke that swing point, and yeah, the swing that we broke of November is going to be also on lighter volume. So that's the XAU. Inside the Gold Bugs Index, let's take a look at this one. Okay, so we get the volume. Put this on the weekly also. So Gold Bugs Index, we're at 167.08. Okay, this is pretty cool too. So this is what we did. We have, you get 127 million, and I'll add the rest of that up. Well, let's just figure this out. Let's see, 430. So approximately 160 million, let's say. And you're coming into 199. Now, this is what the difference is here. Oh, this is pretty cool. Let's see. So we went to 160. You're coming into, yeah, you're coming into the same bar. So the low, this is what the Gold Bugs Index did. The Gold Bugs Index went into the same week, the week of March 18th of 2016. The low of that is 165. We went to 163. It rejected it. It's going to close above it, and we're going to have lighter volume. So now, bottom line is that what you need is that you need a sign of strength there also. So this is, we'll see how this shakes out next week. If we go from there and switch right over to the to the dollar, what you're going to see is just the opposite. So the dollar took off big time. The dollar traded to a high yesterday of 103.53. Now, if we take this dollar and we put this on a continuous contract, what you're going to see here, and this is where the whole danger comes in a huge way, for just, I'd say for all markets, for all commodities, for everything. If this dollar wants to go to 113, guess what? It's all toast. The markets won't be able to handle it, and I'll show you just why in a second. So when we came down, folks, in 2002, we started at 120. The dollar was 120. What it did is this: your first leg down took it down to 104 to 105. You went sideways for about 4 or 5 months, and then you took your next leg down. Well, we're right at that level. That's where we are. We're at it's a small piece of ice, basically. That ice is 102.620. when you come down this fast, when you do break out like this, you can go up that fast. My take is that this is not going to happen, but technically that's what can happen for sure. For sure, too. So that's where we're standing here. You know, you can go fast, furious, all of the above. If we go over and we take a look at Oracle came out with their numbers last night. Oracle's down $1.60, monster volume. And what you're going to see inside those numbers, now they might have made plenty of money. They missed their numbers by a small amount. They were yapping in a huge way that the strong dollar was basically one of the reasons they didn't make their numbers. The amazing part about that, they were talking about the last quarter where the strong dollar was 93 to 95, not 102. Okay? So if you think that these companies are going to continue higher and the dollar is going to stay higher, fundamentally it's not going to happen. It's just almost impossible. So we'll see where that whole thing shakes out. And what I expect it's going to be all about, it's going to be all about that there's going to be a dislocation here somewhere, meaning the dollar moving too quick. Because when currencies move too quick, it does dislocate markets very quickly. Now, we go over to the euro. We take a look at the euro. The euro, because it broke under that 104, you're 104.36, you definitely can make the case. Now, this consolidation here, just as the dollar broke out of its consolidation, you have this 104.63. That bottom line, that's a break downtown. And that break there, let me bring this back. This is pretty intense because that break there, just as the dollar has nothing to stop it on the way up, the euro doesn't really have anything to stop it on the way down. And we're not talking about to 1. You're talking about like 85, 87. And that goes back to 2002. And the euro has been in a consolidation since February of 2015, and you broke it. So as we come into the end of the year next week and the week afterwards, you can expect the volatility to continue, number one. Let me just look at this calendar for a second. So realistically, the market will be opened 5 days next week. Hanukkah and Christmas is on the 25th. It's closed the 26th. You got like 4 days next week for real action. This is Tom O'Brien. This is TFNN. You stay right there, folks. We'll be coming right back. Dow Industrials are flat. Someone's going to buy the Dow. They're going to make it green. You got to love it. NASDAQ is down 22. S&Ps are off 6.5. We're going to be right back.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com.
Tiger Real Estate Opportunity Fund is currently offering 4-year first mortgages on many of the fully renovated properties that it has purchased. The first mortgages are third-party appraised with a maximum loan-to-value ratio of 70%, providing a secured investment that pays a fixed return of 5% annually, which works out to a monthly income of more than $416 per $100,000 investment with your principal intact and secured. These 4-year first mortgages are perfect for anyone looking for a secured investment that provides monthly income much like a CD. For more information, email tigerfund@tfnn.com or click on the Tiger Real Estate Opportunity Fund banner along the right side of the tfnn.com homepage or call our office directly at 877-518-9190. There's a limited supply, so act now.
The holiday season is here, and TFNN Salvation Army Tiger Dollar Special is back. Right now, you can get a 25% bonus on your purchase, and 10% of whatever you spend will be donated in your name to the Salvation Army. The sale only comes around once a year, so don't miss out. Tiger Dollars are a great way to add extra savings to TFNN newsletters or services, and they never expire. Get your Tiger Dollars before the sale ends Thursday, December 22nd, and get your 25% bonus while donating 10% of your purchase to the Salvation Army. For all the details, visit the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tom takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Tom O'Brien. Welcome back, folks. Dow Industrials right now down 10. You get the Nasdaq off 27. S&Ps are off 7.5. Let's go to Kevin in Sacramento. Hey, Kevin, what's going on?
Hey, Tom. How you doing?
I'm doing great, man. Yourself?
Not too bad.
Cool, man.
Hey, I was wondering if you could look at Evelyn Health, symbol EDH.
EDH. Okay, let's see.
Echo Victor Hotel.
Okay. Okay, Evolent Health. They provide a multi-purpose platform powered by technology, proprietary process. Okay, so it's a payment model, reimbursement to payment models. Okay, so the low's $8, the high's 26, the PE's 39. Okay, so what are we looking to do here?
Well, what I did is I bought some puts on it when it crawled over 20, and then I got greedy. I sold some additional puts at 17.5. So I'm gonna make some money on the long puts, but I'll probably lose a little bit on the short puts. So I was just wondering if you thought I should bail on this, or if you thought longer term it had any potential whatsoever.
Okay, so here, walk me through this again. So what happens? Just walk me through that again. You bought puts first.
I bought puts, made good money on those, and then
is that trade closed?
That trade will close at the close of the market because you sold they were 20 by 17.5. So
yeah, you sold them, right? So you're going to collect, right? No one's going to collect on you. Okay, so you're going to get that premium there at the close today. Okay, now tell me the second part of the trade. You did?
Well, I sold some additional puts, 17.5 puts. So those I'm going to get the stock essentially put to me at 17.5. Oh,
don't do that. No, don't do that, man. Yeah.
You think the stock's in trouble?
Yeah.
Okay.
Now, what you have is this. You have, I wouldn't do that, first off, because, and this is the day to do it, because you're going to make money on the other one, so you're going to probably net making money anyway, right?
Yeah, actually, I'll probably lose a little bit, but yeah, it's not bad.
It's better than going into next week. So what's going on is this. Now, this stock has an 18% short interest. So when you look at that, it's like, okay, you could get a pop in a second, right?
Right.
But the way this market is closing right now, this market looks to me like, you're going to close down and you're going to close with monster volume. And, I know it's option expiration, but the way that this works, we could have closed up just as well. And if it closed up with volume, guess what? You're going to go higher. You're closing down with volume, man. We could have a very rough week. And what's going on, folks, is this. So picture this. You have the Dow missed 20,000 by 45 points. The larger issue here is the way that Christmas and New Year's run and Hanukkah run this year goes like this. It's on a Sunday. The markets are closed Monday, but guess what? No one's going to be working Friday. So you get 5 to 7 days here, and big, companies have 5 to 7 days to basically get their portfolio straightened out, man. So I wouldn't mess with it, man.
All right. Right.
go on
Thanks for
vacation.
looking at that.
Okay, man. Have a great one. Have a safe one. So it's going to be intriguing, folks. It's unusual inside the marketplace that I suspect what we're going to have is you're going to have 4 days that the market is really going to have no action. Well, we're going to be closed 3. We're going to close Saturday, Sunday, and Monday, right? But the reality is that because you have the holidays at Christmas and Hanukkah's on Sunday, everyone's going to be taking off Friday because that's going to be like New Year's Eve. I mean, Christmas Eve, New Year's Eve, all of the above. So that means that large money managers more than likely are going to get their books straightened out next week. So now picture this. Put inside all of our heads right now that you're a large money manager and that you've at least done a halfway decent job this year, because money managers in general, they're all long bias, right? It's an accumulation of money. Get the money, put it in the marketplace, and bless yourself and hope that it goes up forever, right? That's the reality inside the marketplace. So what do you have? You have a market that has gone up, and that's what you're getting paid for, number one. And you're getting paid that you're getting paid that the money is in the market, number one, and they're going to make money. So picture this. From last January, if I take January 1st, the S&Ps were at 1857. Well, they're at 2256. So if you're at 2256, you make the choice and say, okay, do I want to come into the last week and not take some money off the table? Now, it's real possible that plenty of them will not take anything off the table and hope that their clients won't pay taxes for the following year. But guess what? There's plenty of them, I think, that will say, okay, they're not going to be more of a hero if they stay in the marketplace and the market goes up another 5%, because that's what the client's going to think. They will absolutely have huge problems if the market goes down 5% next week and the client just got 5% taken away. So kind of how we shake out coming into the end of this year is going to be pretty wild, watching this whole thing shake out. And we'll see where it goes. If we go over to the transports, we take a look at these transports. Transports out here, are trading at 91.72, and the high is 93.10. And what's going to get intriguing about the transports is that this month the transports tested their highs. The highs that were tested, and the transports were a lag it in a huge way, folks. Okay, the highs in the transports were done in 2014. And the transports had the deepest retracement. We had gone from 9,300 down to 6,400, made it all the way back topside, and thus far, still got another week and a half. Thus far, the transports have failed. So we'll see how that shakes out. We got, 372 million shares. You're going into 449. It's a big heads up, though, because when I look at those transports, what you seem to also have is that the airlines themselves, they've been on a decent run, and the amount of, if we go take a look at American Airlines for a second, you're at 47.68, and this has been a decent run off the July lows of 24, so it's doubled in price. But you start looking at airfares, I just don't see how they're going to keep airfares up at the levels that they have them right now. You almost can't go anywhere. And even if we're doing business, we're used to paying a lot more money than a normal, tourist traveler, because you have to go quicker and you can't, business is a business fare, period. And I'm not talking about going business class. I'm just talking about going coach. So you're just going. But what does happen is this. You almost can't go anywhere right now from $600 or $700. And those fares, I just don't see them holding. That's monster bread to get, whether it's a couple hundred, well, let's say 400 or 500 miles. It's a big number. So we'll see where that does shake out. If we take a look at some of the volume characteristics as we come into this close, you're going to see that the SPY's already done 124 million. That's after making a high with 110. We're going to have volume in the SPY. We're going to have volume in the Qs. The Qs, maybe not. Qs have done only 20 million. The small caps out here, IWM is definitely going to have some juice in it. We've done 32 million. You stay right there, folks. We're coming right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Dow right now is just about flat. You get the NASDAQ down 19. S&Ps are out down 5.5. And you can expect this is going to be subtle, but we're going to have some big juice in here. You had 992 million on the NYSE. That'll probably come in with about 1.4 billion because the orders come in at the close are going to be huge. You had 1.9 billion in the NASDAQ composite. That'll also come in big. The Qs, however, though, the NDX 100, it looks like the NDX, let me just pull this up for 1 second. So, the Qs and the NDX look like that they're going to fail on the weekly basis. The NDX right now, the cash is at 49. Oh, no, it's not. Right now, it's not failing. 49.11, 763 would be the number, and we're at 49.13, 246. So we'll see how this shakes out coming into the close. It's going to be a close one. If we go into the futures, you're at 49.13, and it's 49.16. So thus far, that baby hasn't failed. We'll see how this shakes out in the next few minutes. Now, as you come over to our website, folks, at TFNN over the weekend, check out the Tiger Dollars right on the front. It's a great way to save a huge amount of money buying product at TFNN now, if you have product right now, or in the future. This is the first time we're giving a $25 bonus, a 25% bonus right across all the buy points. So the buy points in the Salvation Army Tiger Dollar sale go like this. You can buy $600 and you get $150 extra, so you get $750 to spend. Out of that, we write a check in your name to the Salvation Army for $60, 10% of what the cash value is. They send to you the tax deductible receipt. You can buy $1,200. You end up with $300 extras. You get $1,500. We write a check for $120 to the Salvation Army. You can buy $1,800. You get $450 extra, which is $2,250. We write a check to $180 to the Salvation Army. Bottom line, the Salvation Army folks will send to you right to your house the tax deductible certificate. I think we've done this like 6, 7, 8 years right now. Time just flies, man. And the Salvation Army, they're absolutely fabulous. That's the bottom line. The administrative costs, I don't know what the exact number is, but it's very small. Everything that does get donated there actually gets used by people that need it. So it's a great cause, and it's a great way to come into the next year that you have some extra Tiger Dollars to either get the newsletters that you have right now or any that you are getting in the future. So if we go take a look at these markets as they come into the close, let's go look at the Russell 2000. So the Russell 2000 out here, folks, we have actually look at the Russell. That had a high, not last week, the prior week. It rejected price here. It has to go quite a bit lower to get inside the lower range. The Russell's at 1362. It'd have to come down to 1295. But if you do look at the IWM, what you are going to see, you're going to see that it tested, failed. So that sets up on the IWM. We're at 135 on the. That sets up a run back to 131, and we'll see whether. Number one, if you get there. Number two, does it come down into that area? And does it come down into that area with volume? Always remember, folks, whatever you think about, you bring about. Whatever you focus on grows. And whatever you want in life, folks, visualize it like a nice big motion picture. Step into it, take ownership of it, and fly with it. Everything you need is right inside you. Grab it and have a blast, folks. This is it. Yesterday's gone. Tomorrow's not here. What are you doing right now? Go have a blast with it. Have a great weekend. Look forward to speaking right back here on Monday. Go get them, folks.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com.
This is TFNN.